If you catch that one candle, it can print money, not financial advice. Wake up, close a trade, $700 up. Go to the gym. Open a new trade whilst at Starbucks. Make $588. Close the trade. A famous film quotes that with great power comes great responsibility.
With great power comes great responsibility.
Leverage is very dangerous. You need to be able to understand the fundamentals before ever using it, as it can completely wreck you. You have to understand that leverage providers like Binance, OKX, Bitfinex, Gemini, Coinbase want to take everything from you, so they entice you with bonuses to tempt your instant gratification. Only a few win, most lose and never recover. Leverage is dangerous. This is what you need to know before ever using it as a tool to amplify your gains. I'll go through 3 different steps and then I'll finish off with a conclusion of why I think it could be relevant to understand the increasing use of leverage, especially when it comes to trading and in the crypto world as well. Only play with what you're willing to lose, just like going to a casino. This point is so overused but completely taken for granted. Emotions need to be out of the market completely, especially when trading, so have a clear exit strategy before you put money into a trade. Know exactly what amount will be worth the time of this trade, so have a clear time frame. Is it going to be for minutes, days, or a maximum of weeks, as I wouldn't go past weeks when you are using leverage and trading. Here's an example of how people lose money. They leverage $1,000 into $100,000. They enter the markets as they're going up. They enter the markets at a top because of FOMO and increased attention from news outlets. The markets turn, they panic, they sell at a loss, the markets recover, continue the uptrend, rinse and repeat. Here is a Solana chart. Imagine these are the liquidation levels where you will lose everything you put into the trade if the price touches these levels. The more leverage, the easier your position is to take. These are examples of leverage options. You have 100x, your initial position, easy to take. 50x, easy to take out. 25x, easy to take out. 15x, easy to take out. 5x, harder to take but still possible. 3x, the hardest but still possible. When you have leverage in your trades, you need to realize how easy it is for those positions to be wiped out. And that's why leverage traders can lose, and often do lose, more than they actually make. Market makers hold large positions and can use headlines to panic the market and drive it down. These whales sell these large positions into these markets. Then more people sell and get panicked and the prices continue down more than they should, below their fair value. These same whales buy everything again and cause a V-shaped recovery, now holding more of the asset they wanted. Here are some real examples of events and news headlines that have managed to bring the markets down very quickly. The FTX scandal, the Iran and Israel conflict, the yen carry trade, which is more recent and wiped out trillions from the Nasdaq in hours. Basically, any bad news can lead to a large drop in the market. Therefore, you need to understand the global fundamentals of what you're about to leverage trade. So if you think it's a good time to be in risk assets like Solana, because bank funding rates around the world are going down, money's moving into the markets, Solana has the fastest, cheapest and most used blockchain, then this is bullish. You're positive about this. With this fundamental belief, you can go long with a clear time frame, minutes, hours, days, weeks maximum, with an amount of money that you're willing to lose. Here is how I do it. I use Jupiter, a decentralized exchange on Solana. You download a Phantom hot wallet to interact with this blockchain. Deposit or buy some Solana and then you're good to go. Firstly, add collateral. I've got $23. Secondly, choose your leverage. I went insane with 97x. Never recommend. Position is created, $23 becomes $2,255. Optional, create a stop loss to protect your initial capital. Optional because the moves in crypto are so volatile that a stop loss can be hit very easily and your position can be closed at a loss. Next, optional, take profit at 147 to lock in a win without getting greedy. Have a plan before you start trading. Now you can see high leverage means that your liquidation level is close to the entry price. I lose everything I put in at $144.84. The higher your leverage, the higher your liquidation level, which means that if these two cross, it's over. That trade was for entertainment purposes, but as you can see, because it was such high leverage, the liquidation level was so close to the entry price. To do a trade like that, you'd need to watch it like a hawk, have money that you're willing to lose, because at any moment the market could easily just pop down, take me out, and then continue up, which is what it's always trying to do. If you made it to this part of the video, like, subscribe if you got any value from this content. Could it be relevant is something that I ask myself every day, and especially with leverage trading, why it's become so increasingly used around the crypto markets and markets in general. You have so many different ways to maximize your gains, but also maximize the chance to lose everything. I would say that leverage has a place if you understand how to use it, and if you understand that whatever you are about to leverage trade, you have to have real conviction in the direction that it's going to go in, whether it's going up or if you're going to short it and it's going down. You might have an edge on someone in that industry, you might understand something or have an insight that most people aren't aware of. You have to take it seriously, but one trade in the right market at the right time in the right stock can really truly change your life, or it can make a difference and it can maximize your gains. The problem with leverage is that it's trying to feed into the instant gratification, which is why it's relevant. The world's becoming more dopamine driven, meaning that we need to have this instant gratification. We need to try and get to a certain level in life as quickly as possible, which is why it's so easy to tempt people who have a certain amount of money and they want to try and make it a lot larger overnight and get to that level of wealth that they're happy with as fast as they can, but also at the same time they lose what they initially had, or they put what they initially had at risk. Instant gratification is that immediate want to try and get to a certain level. You've got the markets trying to play the game of take the money from the impatient and move it to the patient, those that can hold on and that can wait for many years to see the returns of an investment. You have the fear and the greed. When you're seeing the market go down and you're seeing your trade at a loss, you're probably going to panic and try and hold on to what you have because you think that you're going to lose it all. But then at that point, usually it's about to turn up. That fear when the markets are moving down, and then the greed when the markets are moving up. Because even if your trade's going well, you think, oh, I could make even more if I just hold on for a little bit longer. Any gain, any profit is always a good thing. It's never going to be a bad thing. It's always going to be an improvement on where you started. The V-shaped recoveries happen because there's an interest in those that have large positions to try and drop the markets down and liquidate the people who have got high leverage. So that happens quite often, especially in the bull market when the prices are going up. I'd say I want to end with this. If you wanted to leverage trade, use low leverage with money that you're willing to lose, and just understand that whatever you're leverage trading, have a good fundamental understanding of that asset and be bullish on that asset. Be positive about that asset, or if you are negative about that asset, that's also fine. But you need that conviction in order to have any level of success with these trades, because they can be extremely risky and dangerous. So I hope that you got some value from this. I hope you managed to understand that leverage trading is definitely not something that anyone needs to do. It's definitely not something that I would ever encourage anyone to do. But if you understand the fundamentals of what you're about to invest in or trade, and you have an edge and you have the time and you have the money that you can lose, like you're going to a casino, then why not? It's your choice. It's a free world. I want to say thank you for anyone who's managed to get to this point in the video. If you've managed to get this far, leave a comment just to tell me if you managed to make it to this far. I don't know how much retention these videos get, but if you've managed to get this far, I really appreciate it. And I'll see you in the next one. Thank you very much.